Big picture for 24 for light crude and natural gas. If there's anything we learned in this last year is that there's plenty of oil around. I mean, no matter what OPEC Plus seems to do when they've been cutting back on their production, well, the oil market has not done very well. And come into later part of the year, we've seen some softness as the economies look to be in recession or going into recession in 24. Last year, we thought that the market in oil would come down early and test 70, and that the next rally would likely fail. Well, it actually fell harder early. It got down to about 63, and then we projected that a high would come sometime in Q3 or Q4 and get up to about 96. Actually, it got up to 95 in Q3, so overall it was not a bad call for us for the year. Natural gas we were also very close on, and when I show you natural gas, I think you're going to get excited. Let's take a look here as we switch over to the oil market. I always want to highlight the fact that there is amazing cyclicality in these markets, and you can see there is an 18-month average cycle. Let me get my little pointer up right over here that we have designated here. Cycles tend to run, plus or minus a few bars, and so they're not always going to come out exactly. We have the timing lines right in here when the actual cyclical lows were made, and these are where the average or ideal cyclical lows or troughs would be made. And the distance between those lows on average is 18 months, but still you can see beautiful rhythms and cyclicality that is in here. First point that I think is important to make based on where we are right now is that we see that this cycle right in here that occurred in 22 into early 23 was a cycle that started and ended at the same point. Cycle begins and ends at the point of origination. If it was ideal, you would see that it would look like this, and this is about as close to an ideal cycle timing as you will get, though the peak was over here more on the left side. Usually when you have a left-hand translation like this, you end up having markets that are weaker. And this one took a while to get weak, but you could see came down below the 78.6%. Around mid-cycle is not a good thing. It tells you that the cycle is very likely to fail if it tries to rally and then continue to come down. You can see right over here where the 78.6% broke later in the cycle, but still had a few months where it fell quite sharply right there. So that's important. Look right over here. 78.6% is broken. That says to you here quite early in the cycle that if rallies are to come, they're very likely to fail and then continue to move on the downside. The best case that I can make for oil this year, outside of something that happens very significantly geopolitically, would be that it would come up and fail in this resistance level somewhere between 78 and 81 sometime during the year, and then come down, and you can see where this trough is between these two cycle timing lines. The ideal is somewhere near the end of the year in 24. So that says after trying at some point to come up in here, it's likely to move down again. Very high probability the low for the year will come in somewhere around the 50% fib extension, or this level over here, which is the 61.8% fib extension. So this level right over here is 61. This level right over here is 53.5. 53.5 may be too pessimistic, but we'll take the target of 61 for the low, a range of moving up some point to around 78 to 81, and then moving down here to 61. If anything, I think that that may be an optimistic call. It may end up to be worse than that as a rally in here fails before it gets up into that resistance zone. This one got well up into those resistance zones, as you could see right over there. And this one over here, which actually broke that low, the cycle low period right over there, with a lot of months to go, and then fell very hard, as you can see after that. So this one somewhere in the middle between a very bearish cycle here and a little more positive shape right in here, which is right here, which says oil prices are not likely to do well in 2024. So this is a overall pretty negative look at oil. And, you know, here we are at the beginning of the year with lots of geopolitical issues going on. And the Houthis in Yemen, you know, trying to shoot at ships in the Red Sea, the Iran sending a warship into the Red Sea, and a lot of other geopolitical wranglings going on. Will Iran get into a hot war with Israel or the U.S.? That's all a question. And what that would mean for oil if they try to block the Straits of Hormuz. These are all things that could happen and could make this picture be more positive. It would take some kind of a significant event, I think, to make the oil market look better than it looks right now, which is actually pretty bad. So oil we're going to call weak for the year. The next stock, the next future we're going to look at is natural gas, and this one is a very different picture. I want to go out right over here so you could see these big harmonics that we have right in here, and so that you could give a big wow like I do. This is really amazing here when I look at this. Let me move this over a little bit. What I want you to see are these four major harmonic families that occurred back to 2007 that we're looking at here. Now, the key thing that we're looking at, and last year when I looked at this analysis, I drew this in. I said rally and then come back down here towards the end of the year, which is exactly what happened. You can go back and watch that video. Now, I thought that the low would come in somewhere around here, and that actually might still happen. But now look what happens after the lows are made in the beginning of these harmonic families. 262% gain here really came in the first quarter cycle. The cycle's a little off because these cycles are more in line. So the further back you get, the harder it is for them to be exactly in line. So you could see that this was the first half cycle, which actually bottomed right over here, and then the second half cycle, which was a little longer, and then we got into this perfect timing, basically, that we see in here. And you can see that in this case, the peak was made here in the second quarter cycle right over here, 356% up. This one was 240% up in the first quarter cycle, and then it took to the third quarter cycle to make a higher gain, but 240% gain. This one, look at this. I mean, you could see there were 1, 2 minor cycles, 3 minor cycles before it really made the peak. 702% gain right there. That was Russia invading the Ukraine that really pushed it up at that point, and then it went into a collapse because plenty of natural gas out there. Let's take a look at where we are right now. The ideal timing is for the major low sometime in mid-24. It could come sooner, could come later. You can see in here that the blue quarter cycle syncs with the dominant weekly in somewhere around in February of 24 plus or minus. So that could be that sometime in the first quarter is when this low is made based on the weekly pattern. Now that could extend out for a whole nother weekly cycle and then push it out more towards mid 24. We don't know really. What's really interesting is that you can see the reversal scout where it turned up right over here. That is really unusual. You know, it got flat over here and then turned down again at the end of that cycle. But this one right over here is really the reversal scout is very positive right over here. And this is essentially saying that there is a lot of strength right now in this market already, even though this is starting to come down. So that says to me that when this is over with, well, what's likely to happen? So we're projecting that, you know, probably sometime in 2024, you're going to get up to here to that 23.6% fib. That's at about 370 right there. That would be a very reasonable spot for it to move up to, just over where these levels were right over there. So that's around this was 370, this is around 385. And then sometime in 2025, you can see that we're projecting up to a 258% gain to this level right over here, which would be around $5. So you say, well, wow, you're saying it's going to move up from somewhere in the 180s as a low, or $2 all the way up here to $5 or more? Well, that's not a big call based on everything that I said to you in here about these gains in these beautiful cycle harmonics that you see right in here. It's a conservative call. Why can't it actually go to, $6 or $7? Well, it certainly could based on what we see here. And what I'm saying to you is that there is a major bottom going to be formed in 2024 in the natural gas market, with some potential for some very, very big gains. If you look at only the first quarter cycle here and the first quarter cycle here, this was that 240% gain right over there. Well, this one came from a low of 144 up to 339. So that was about a 250% gain right there. So, calling it up to $3.50 to $4, 385 right over here this year, I don't think that's a bold call at all. I think that we're going to see that, and this may be one of the better markets for the year. Well, of course, I'm looking for the same thing in the metals markets, if you've already watched that part of this video, and that really is in alignment with what we're looking for as an inflationary scenario that really could be coming in the second half of the year, and that, of course, probably does not bode that well for interest rates, does it? Well, we'll have to see how that all aligns. Natural gas, a major bottom, very likely to be formed before mid-year this year, maybe sooner than that, and then some pretty powerful gains ahead. I think that looks pretty clear. So that's a look at light crude and natural gas for 2024.